Hey guys, welcome back to the channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, and backed by popular demand, we have Anthony Power. He's one of the top Bitcoin mining analysts in the world. He was actually a speaker at the Dubai Alternate Investment Conference, and he's had the pleasure of interacting with a number of the same CEOs that we've featured on the channel. Now I'm super excited to get into today's discussion, talk about the November results and some of the trends we're seeing in the Bitcoin mining space. Obviously the price of Bitcoin has been absolutely off to the races over the last couple of weeks, so a lot of excitement in general about this space. Now before we get into all that, please take a second, hit the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let me know in the comment section below what you thought of today's discussion, which of the Bitcoin mining companies you're currently holding, and your price target moving into next year's halving event. Now with that being said, let's get into today's discussion. Okay guys, so that's right, today's video, and like I mentioned, backed by popular demand, we've got Anthony Power. He just crossed 9,000 followers on Twitter. He's really become one of the household names in terms of Bitcoin mining analysts, and what a time to be in the Bitcoin space, Anthony. It's been absolutely off to the races over the last few weeks. So thanks so much for coming back, and a lot to get through today.
Thanks very much for having me, Bryce. Great to be here.
You're always welcome. As I mentioned, the Bitcoin stocks and Bitcoin miners have been doing great lately. I was able to buy myself a new sweater here, Anthony. Times are good over in Canada. I know you're coming to us from the UK. Let's kick it off with what's happened in November over the last 30 days, because we've had a lot of big announcements out of the Bitcoin mining community.
Yeah, I mean, two things have occurred in sort of correlation, really. We've seen that global hash rate really motor through the 600 barrier, and literally, I think yesterday, the 4th of December, we saw it break, close to 650 exahash. And when you consider where it started at the start of the year, that's a 150% increase in literally 11 months. It's back today at about the 532 mark, 533, and that's still 100% more than the start of the year. So when the analysts on your channel were starting to give their indications, and I know you got a lot of the mining officers earlier in the year, and I was on the channel as well, and we were coming up this 375, maybe 400. That number was blown out of proportion, by the time we got to April. So that trajectory's continued. It obviously means that there are lots more miners coming onto the network. The positive thing is, because more miners going into the network means that these Bitcoin miners that we're discussing today actually mine less Bitcoin, because there's more miners and less Bitcoin to share around than more miners. Positive thing is the Bitcoin price increased during the month of November, and then significantly increased from the last day in November to where we are today. And I think last time I looked, I think it was like 42,400. So that's another 25% sort of increase. That's a significant jump on where we were, just literally a week ago. So that's a benefit to miners. We started to see a few of the miners give their updates for November, and the numbers of Bitcoin are down, obviously down to the difficulty going up again by about just over 6% for the month, so that's less Bitcoin mined. However, the revenues that they're receiving are actually significantly higher than October. So there was a benefit, less Bitcoin, but higher revenues. Now, some of that revenues, I think if you remember the first part of November, the transaction fees really took off, and we were seeing miners, typically, a block would be generally 6.25 Bitcoin mined every 10 minutes. But we were seeing miners achieve 9, 10 Bitcoin per block. So that's a nice bump in the early part of November. It did ease off towards the end of November, but we're still seeing sort of like average transaction fees higher than previous months. So maybe we start to see that sort of indication going forward, because these miners going through the halving, when the amount of Bitcoin halves in April next year, it's going to be a challenge. And one of the ideas is that transaction fees may have to be increased to compensate miners to keep mining, to do what they do and audit the blockchain. So we had about 6-7 miners issue, and as I say, gone through those numbers very, very briefly today, because they're coming out literally as we speak, and all of them were mining less Bitcoin. but the revenues were higher. If we take sort of Marathon Digital, who announced theirs today, they brought out some good news. They've now got the 23 exahash all energized. So the Garden City facility, that's all on there. There was 4 exahash waiting to be switched on. So everything is hunky-dory there. And they're at 23.1 exahash in North America. They've also increased their hash rate in the UAE. So that joint venture in the UAE, I think they're about 2.5 exahash at the moment. So motoring away to 7, and they anticipate getting to 7 in January. So not long to go to get another 4 or 5 exahash, plugged into the immersion cooling technology over there. That gives them an extra 1.4 because they've got 20% of the total exahash in that joint venture. They've already started mining in Paraguay now, so they've got machines going in Paraguay. So that's another positive thing. And I know they've got their eye on lots of other places around the world. I know they recently visited Africa, and so they're looking to to expand, to grow, grow upwards. And they're already looking at a 30 exahash target for early 2024. But believe you me, it doesn't stop at 30 with Marathon. We've seen them. They'll come out with another number. And we'll get on to another miner shortly who sort of blew the market open yesterday with their announcement. But I think the message is less Bitcoin because of the difficulty and the global hash rate, but the revenues are compensating for that difficulty. So miners are better off this month. And even if you look at the likes of Argo blockchain, who struggled over sort of like the last 12, 18 months with what they've gone through to get to refinance the organization. They're now a host at their previous facility, but they achieved an extra sort of like nearly 25% more revenue in the month of November than they did in October, with 1 day less mining. So that's a real positive for them. So that'll help them. That's much needed money for them. But I think overall positive.
Great. So at a macro level, we've set the stage. I think that was a great summary, Anthony. However, the viewers are here. They want the nitty gritty on the individual stocks. So you mentioned Mara. I know we're going to talk about Bitfarms, CleanSpark, Cipher, Argo. There's been a lot of action. So let's kick it off. Let's narrow down to the individual miner level. We had Fred Thiel on. We had Jeff from Bitfarms. I've got my my Bitcoin alert going off on the back there. So hopefully that's a good move. But we've seen a lot of them come out and announce new miner purchases. Specifically, a lot of companies are now going towards the T21, which has dual modes and actually allows people to overclock. So what's your analysis there as people start to increase their fleet efficiency going into halving? What are the trends you're noticing?
It's just extremely positive. And we were talking about this 6 months ago when we were discussing the halving coming forward. What were the things that the miners needed to do for the halving? They had to get their costs in order going into the halving. They had to get cheap energy. They had to get a more efficient fleet. And what do we see Bitfarms do? They went out and put a massive order in for T21s, which will bring their efficiency down. And even they acknowledge that their efficiency at the moment, compared to some of their peer miners, wasn't great. I think it was about 35 joules per terahash. When you look at sort of CleanSpark or Marathon, who are probably around about the 25, 26. I think Marathon are at 24 at the moment. So they've got, a significant amount of XPs in their fleet. So by bringing this big order in, which will be delivered over the sort of like the next sort of, by mid 2024, that sort of gets their efficiency really down to a more, competitive level. Because going through the halving, you've got to have that competitiveness. If you can mine with less energy because you've got more efficient miners, you're keeping your costs down. Because straight away at the halving, the cost to mine a Bitcoin, if you're using the same machine the day before and the day after, it just doubles in terms of energy. Because it takes twice as long to mine one Bitcoin as it did the day before. There's only 3.125 Bitcoin available per block, as opposed to 6.25 at the moment. So Bitfarms did a fantastic deal. In the same weeks, we've seen Iris Energy. They've done exactly the same. They've gone out to the market, not one order, but 2 orders, 2 smaller orders. But I think still significant. It's still about 2.7, 2.8 exahash, again, of T21s with Bitmain. And also CleanSpark went out and they had an order for 4.4. So you can see these miners moving into that sort of like more efficient fleet. These are the top machines at the top end of the market. And also the price they're paying, I think, looking at an average of about $14 a terahash. Now, go back to the end of 2021 when it was S19s only, and I can remember some mining companies paying $80 plus per terahash. That's a sort of a significant, reduction in what we were seeing in those days there. So miners are making real hay with the price of machines at the moment, getting big orders. What we saw yesterday was a miner taking it to another level. Riot Platforms announced not only that they purchased 18 exahash of MicroBT efficient miners. So MicroBT is a competing miner with the Bitmain miner. So the most efficient miners, that MicroBT. So I think it's like 66,000 machines, which will be delivered during 2024 to their Corsicana site, which is a couple of hour drive from the Whinstone facility. So both sites in Texas. But that is an enormous, I'm going to say that's the largest order that we've seen any miner in one order produce. And there was a little caveat at the bottom of the order to say that they have an option for a further 75 exahash at the price, literally at an agreed price now. So that total, in terms of self-mining, puts Riot at over 100 exahash, should they actually go out and take that option to buy the further 75. So what they've done there really is they're just telling the market they're future-proof now for the next few years. And they've got a 1 gigawatt facility being built as we speak. So they've been building that facility well over 12 months now. So we'll start seeing the miners go into there that they ordered previously through MicroBT. So they ordered 7.5 exahash, a number of months ago, and those miners will go into Corsicana after the new year, into probably the first quarter of 2024. But this other 18 exahashes on top of that, and they'll start. That'll start being deployed during 2024 itself and into 2025. But size matters. They've just sort of put a little marker out there to the rest of the miners who've been buying 1, 2, 3, 4 exahash and said, there you go. I mean, we've discussed the likes of Marathon Digital and Riot before. The resources they have, from benefiting from that early listing on the NASDAQ, which meant a lot of institutional investment came flooding into those companies and is still there. I think on your recent podcast with Fred, Marathon Digital have 50% of institutional investment. Now, he'd like it to get to 60, but 50%, when you compare that to some of the miners, that's significant. A lot of these miners, it's a lot of retail investment, because of the fact is, to be honest, it is quite a risky investment to be in. The volatility of the miners is far more volatile than actually, investing in Bitcoin itself, or in, say, an index fund. But that volatility appeals to a certain type of retail investor, because, we've looked at this week with the Bitcoin price getting to over 42, what's happened to the miner prices? And so, that volatility has really appealed. And we'll go on to talk about, the miners that have done well from a share price in the last week as well.
Sure. Yeah, there's so much to unpack there. And now that the Bitcoin price is moving, it really gives a lot of optionality to these miners. And you're totally right. Riot saw the move from some of the mid-tier miners and said, hey, you know what, we're going to call your raise and we're going all in here. And I think you were the one who said this to me, Anthony, but in this industry, if you're not growing, you're shrinking, right? And as average or total hash rate, global hash rate continues to rise, these companies need to keep that percentage. Plus the fact now that Bitcoin price is up, a lot of these legacy, less efficient miners may still continue to be plugged in post-halving if the economy or economics are there. So let's move into share price. Really, no matter what company in this space you are holding, it's been a pretty good week or week and a half, but there's definitely some standouts. So what are you seeing in terms of the big moves, Anthony? And is there still value anywhere in your opinion?
So there was 3 companies that had big moves this week. One will surprise a number of people, but 2 are probably, we've covered them extensively in previous podcasts, and they do have great performance. So if we're looking at just like the last 5 days when we've seen this rise in the Bitcoin price, the likes of CleanSpark, that's I think over 50% increase even in that short period. Bitfarms not far behind at 46%. However, both have been outdone by Core Scientific, which is about 60% up in the same period. Now, Core Scientific a year ago were having, serious difficult issues. They went into Chapter 11. Their share price, I think, dropped to as low as about 4 cents. It's currently today hovering, I think, somewhere between 60 and 70 cents. But they'll come out of Chapter 11 with a new sort of like management structure that have been working hard to deal with the various lenders and creditors to get the company in a position where it's viable to continue as a Bitcoin miner. Let's not forget, they've got 15.2 exahash and they've been mining at 15.2 all through the year. So, they've been producing an average of about at least 1,000 Bitcoin per month. They're not a small miner. The Bitcoin price at the moment will only help them, get through some of the repayments quicker than maybe they planned, because the price has really jumped. So I think maybe an expectation for them to come out of Chapter 11 in the early part of January 2024. I get the impression that shareholders, if you were talking to shareholders 6-7 months ago, their expectation was not very high in terms of what it would look like for shareholders post Chapter 11. But I think having read through the documents, I think shareholders there might be some growth opportunity there for them. So they are a Goliath. At the moment their valuation is around about 250 million. Yes, they carry a significant amount of debt. So if you look at the enterprise value gets to 1 billion. But you look at the likes of Marathon and Riot, who, yes, Marathon have got more hash rate now. Riot haven't got more hash rate, but Riot are valued at over 3 billion as a market cap. So, there's potential for Core Scientific coming out of Chapter 11 and starting to get a valuation that puts them into that sort of, what I would say is like the top tier. And at the moment, if you look at from an operational point of view, the top tier would be Marathon, Core Scientific, CleanSpark, and Riot. I think those 4 miners, with their hash rate at the moment, are sort of moving away. But as I've just mentioned in the previous question, you've got the likes of Bitfarms, you've got the likes of Iris Energy, you've got the likes of Hut, who just merged with US BTC. So that occurred on the 30th of November and started trading on the 4th of December. You've got some really solid mid-tier miners who are itching to get into that sort of like that top tier and show the rest of the miners what they're all about. So 2024 could be a really good year for a lot of these miners. But all the miners are green certainly over the last few weeks. We've seen some really good gains. Even some of the miners that haven't performed well this year, Argo blockchain's up 30% in the last 5 days. That's seen some green shoots. So we've not always had a lot of nice things to say about Argo, but they've got new management. A new CEO came in literally a few weeks ago. So and he's very well respected in this space. So he's taken on a project there, and I'm sure he thought long and hard before he accepted that project to see if he could deliver what the shareholders are hoping for. So let's hope that gives them some good grounding. But yeah, the Bitcoin price is helping out all miners at the moment. And as I say, who knows where it goes at the end of the year or into 2024 as we get closer and closer to the halving. We're less than 20 weeks away from the halving now, so it's going to be short and fast to get to that point.
Incredible. I know it seems like it was years away just a couple of weeks ago. Now, you mentioned Hut 8. We have an interview with Sue Ennis. We're hoping to get a member of the US BTC team on as well tomorrow, so keep an eye out for that one, you guys. There's a lot of activity in this space. It's why I absolutely love talking about Bitcoin and Bitcoin miners. So we'll be sure to get Anthony back on here soon. Anthony, I'll kick it back to you for any closing remarks, and we really appreciate your time here today.
Yeah, I mean, it's literally been, I would say the last 2 weeks has been one positive story after another. I've found that, I'm reporting, a lot more positivity. I'm seeing, especially in the various channels, the retail investors are very much upbeat. We've had 18 months of sort of like, seeing, the price of Bitcoin not at the levels that we would have liked it to have been. So it's a long time coming. But this last month or two, we're starting to see those real green shoots and positivity back in the space. And we haven't mentioned the potential about a spot ETF being approved. what that means for Bitcoin, what it means for the miners. Is it positive for the miners? Does it mean that actually investors will move more to a spot ETF than in the mining sector? I just go back to the fact that the people in the mining sector, they enjoy that volatility. Yesterday we saw shares. I mean, there was one share that was over 100% up yesterday, a small miner, and Core Scientific. I think that yesterday was up 75%. So potential really big gains. But equally, we can see miners drop by 50 or 60% in a day as well. And uncorrelated to Bitcoin. Bitcoin tends to be sort of like in a I would say volatility of something like 7 or 8%, but the mining stocks can be volatile by 15 to 20%. And even today we've got a few of the miners, Bitfarms, and TeraWulf are having a good day today as well. So let's give a shout out to TeraWulf. They still continue to mine Bitcoin. At a little over 3.5 cents a kilowatt hour, which a lot of the other miners would be very jealous of that mining rate. So achieving gross margins. But yeah, I think generally everything's positive at the moment, and let's hope it stays that way. It makes our podcast a lot more easy to get through.
Yeah, now we can start saying I told you so. But no, it's a good point, Anthony. It's a high risk, high reward industry. There's a lot of volatility. It's not for the faint of heart. And as always, you guys, this is not personal financial advice, and always make sure you're doing your own research. But you alluded to the ETF. I'm also starting to hear rumors of the Sovereign Wealth Fund exploring and dabbling in Bitcoin. I wouldn't be surprised to see some of the big blue chip companies start to load up their balance sheet. So we've got a lot more to talk about, but we'll leave that. They call that a cliffhanger in the industry, Anthony. We'll leave that for the next video. We appreciate the analysis on November. You're always welcome on the channel, and we'll talk to you soon.
Thanks very much, Bryce.
Take care.